part, and the third part of your cash flow, which is financing activities. I'm going to stick to this example. First of all, the first two lines are specific to shares, and then the third one you can see is about a long-term borrowing, which is basically loan. You can just write loan. But what are these? These are the money, the amounts that are coming in or out that helps financing your business. So your business has got money, capital to run. So either you're getting it from your shares or you are getting it from a loan, so like your debt equity ratio. But also the share capital has two options. You'll see for this exercise both happen. Normally it's just one of them. The first line proceeds from the issue of share capital. You issued more shares, and the second one is you bought back some shares. So where do I get this information from? You're going to have to go to the statement of your financial position. First half you'll get all your assets, and then you'll get your equity and your liabilities, and under that directly you'll find your ordinary share capital. And you have got two parts, the capital and the retained income. For now, we're going to look at the capital. I just swapped these two amounts around. But anyway, basically what has happened here is for this year, I've got 2,032,000. And last year I had 2.1 million for my capital. But I cannot just compare these two and say, oh, wow, it's gone down. I must have repurchased shares. No. If they provide you the note like they did here, then you'll see a lot more happened than just repurchasing of shares. You had your 2.1 million at the beginning of the year, then you issued more shares, then you bought back shares, and now you're sitting on 2 million. So in your cash flow, these two will be shown separately, but it's a little bit more complex than that. Let's just start with the issuing of shares. That's the first part. So you get more cash in. You're going to issue some shares to some new shareholders. So you got 160,000 shares. They're probably at about 2 Rand each. And that is how much, no, it's not 2 Rand each. You do the math, and it's 520,000 Rand of cash that came in. So if you look at your cash flow, which we are busy with, that is a positive 520,000 Rand in total that came in from issuing shares. Repurchase is a little bit more complex. You have got 588 that came out of capital. Now, if you can remember, repurchasing of shares, of buying back of shares, there's a separate video on this. What happened there was you had to split. Some of the money came from here, and then some of your money came from your retained income. So if you go to retained income, you'll see repurchase of shares 280,000. 95 cents of that, 266,000, came from your retained income. So what do you do in your cash flow? If you split it up in your statement of financial position, what do you do in the cash flow? You put it back together because you just want to know about how much did it cost you. So you'll see the 588 that came from capital is there, and then the 266 that came from the retained income. So the total is 854. You spent a lot of cash on buying back those shares. But I always go the short route. I ask myself, what was the selling price of those shares? That was 3 Rand and 5 cents. I'm not going to focus on the 2 Rand and 10, and this was 95 cents. Just the total cost of the repurchase was 854, and you can see it's in a bracket. And then lastly, if I look at the loan, this part is fairly easy. You gain a loan of 1.2 million. You can go and look in your financial statement and see if it went up or down. But in this instance also, it was a little bit more complex. I'm going to give you some information that I just made up to give you a more difficult scenario. So let's say at the beginning of the year, you got the loan, the 1.2 that I just showed you in the face of the cash flow. So you gained some cash. But then they also mentioned there was monthly payments or installments. They call it installments as well, 31,250, but this included your interest. And luckily they also shared, or you figured it out early on in the exercise, that the total interest for the year was 135,000 Rand. So here's a very important calculation that you will definitely use somewhere for loan, be it in the cash flow, be it in the financial statements. But if you know the format of this and try and understand it, then it will help you unlock any amount that's missing. So first of all, you look at what was your loan at the beginning of the year. So now you know you just got 1.2 million on the 1st of Feb. So that's what it was. And then secondly, you add the interest. Now, often this is the unknown. This is the one that you don't know. So you're going to have to unlock this one, and that's normally added. And then secondly, if there was any repayments mentioned, it's very easy to calculate. They often say per month. So like for this one, you had 31,250 for 12 months. So you know in total, if you just do that on your calculator, 375 is how much cash you spent on the loan for the year. Okay, so that's your repayments. But this is a bit messy. It's got interest in it, and you calculated interest paid already, and it's sitting in the face of your cash flow. So you need to clean this up somehow. Sometimes there's another line where they increase the capital portion of the loan, but that doesn't happen often, where you just decide, oh, I want to borrow more money during the year. But in most instances, this is the basic. The loan at the end of the year, you can find in your financial statements. You can go and look there and see what the amount was there. So I think it's, 960. So now the missing amount, 135, how do you calculate it? If you work from the bottom to the top, you switch your plus and minuses. So put 960 in your calculator, plus 375 minus 1.2 million, and you'll find, yay, it's 100% right, because you'll see this is sitting in your cash flow, 135 for interest. But as I mentioned, I need to clean this up. My repayment, 375, is for the interest as well as the capital portion, which is this 1.2 million of the loan. So how do I know how much of this is for the actual loan? It's simple. You just take your 375 and you take out the interest, which you just now calculated by unlocking it, and amount is 240,000 was towards the capital portion of the loan, the actual original loan, and 135 was for the interest. So if you had to, which you don't have to with this exercise, but if you had to add it, look at this arrow, it will be here in the green section, and you would say payment of the capital portion of loan, or you can just say payment of the loan, and you will have 240,000. What learners often do is they include the interest here. And what you need to remind yourself of is the interest is above 135. You're not going to pay the interest twice. So the interest is there, even though it's capitalized. And here at the bottom, nice and clean, you just have the portion of the loan.